Here's how you can make all of your money trading about 1 hour a day, just following simple price action trading strategies. So I'm looking at the ES 2000 tick chart, and you can see here that we had quite a bit of price action today. Now, the reason I say about an hour is because if you were just trading for about an hour and 10 minutes or so today, that would have been all you need. But really, if you were trading for under an hour, you could have done that too. And I'm going to show you exactly how you can do this. And these types of setups happen pretty much every day. So if you start trading in the morning before the market opens, a lot of times you get these big impulsive moves shortly before the open. So you can see here there's a big down move. Now I started a little bit later this morning than typically. A lot of times I come in right around like 5 in the morning or so, and you can see that would have been back in this area at some point. But I actually came in around like 6 or so today. So even with that being said, there's a downtrend here, and there are some possible setups in there. But if you just waited for this downtrend to play out, which it does here, it closes outside, you get a new low, and then boom, you get a higher low. This is a pretty much, for me, this is basically a guaranteed setup. Like it's pretty much a guaranteed win if you get into this trade. And especially when it broke like this, because what you get is a close outside, pullback, very slight pullback, and then a new low. So this is kind of like two legs to a new low. And what I mean by that is that you can measure this like this, and it's almost exactly two legs down to a new low. So that means the downtrend is played out. Now I had this downtrend, bigger line, and so I was expecting that we're probably going back to the EMA. So you get a bullish move, a pullback, and this traps all the shorts. So you're looking at this as a trap because everyone piled on short here. And then what happens is this candle, it opens here, it breaks lower, and immediately reverses. So you could have entered this one tick above this bar on the engulfing bar. So basically you have your stop order, stop long order just sitting right there. And then as soon as this thing comes up, it fills you and boom, you're off to the races. You take basically no heat. I think it comes against you maybe 1 or 2 ticks. Stop loss below this bar. You ride out to the EMA, which I think gets you, a couple points to the EMA. So you can take, I think when I took it, I took 6 ticks first, and then you have a runner because basically you get filled on your 6 ticks. Stop loss moves to break even. So now your stop loss after you get your 6 ticks is sitting like right here. Okay, so I'm just going to draw a line to show this. So you have your stop loss right here. And then it doesn't come back. It just keeps going. So then what you can do is you draw your trend line, and you can kind of trail the trend line here. And what you can do is as you can either put it below when you have a bearish candle and it breaks below, or if you want to really manage your runner the right way, what I would be doing is waiting for a break of this uptrend line. So you're keeping your stop loss below the trend line as it's going up, below the EMA as well, and you're just trailing this thing. And what you're doing is watching. Here it gets close. I think earlier I had it drawn kind of like this. So at this point now, once it does that, I'd probably still be down here. And then you come all the way up. You finally get a close outside here. So then what you'd do is you'd probably put your stop loss right below that. You'd probably get filled right there on it. And that's where you'd get stopped out. Or you could trail it at the EMA if you want to be more, you want to give it even more room, in which case you could have kept trailing it all the way up and gotten out over here. It's basically the same position though. It's not really much difference. And so what does that give us? Well, that gives us a runner where you get almost 20 points out of it. You get about, call it 18. I think I have this off by I put that in very slightly. You get 19 points out of that. You get 19 points. Now another thing that I didn't say, but that you could do here, let me delete that, is you could also just get out at this trend line. So right there. And because you knew that there was a downtrend line working and we'd probably find resistance. And as you saw this red candle form, you could have, got out there, or you could have just had your order sitting on the trend line. Now, it sometimes goes through that. So it just depends on how you want to play it. If you just got out at the trend line, if you just had a limit order sitting there, then you would have got almost 20 points. So it would have got you to the same place. And so that's how you can manage that. Now, if you didn't get in here, when you saw this form, this would have also given you more confidence when this happened and you're in the trade. Because what you have here is a first entry, second entry short that fails. This is a more advanced trade. So it's a failed second entry short. When it breaks back above this bar, this thing's probably going off to the races. Now it ends up not, I thought this was going to be an impulse and shoot all the way up. It ends up not doing that because this trend line is in play. And so it bounces back in and it kind of just slowly grinds up. And at this point, the market wasn't even open yet. So, but that's a possible long there. Then what happens over here is then it breaks up. You get a close outside of this trend line now. And you are expecting, hey, maybe we go lower because we did have this downtrend in play, but it wasn't really that confirmed. So I was really playing this as a range. And at the time, I think I had the top of the range. I basically had this like this. This blue line was my range high up to like this point. And so when I saw this one, this is just a lower high back into the range. So there's a short there. That's a pretty nice one. Basically just a lower high off the range top, kind of like a triple test lower high. And so that one was a valid setup. And then this one is a first entry, second entry that fails. So you could actually have your order one tick below this bar and then just to ride it down to the low. So those are both two quick little scalps. Now you're not looking for runners on those. Those ones I would have just been trying to get out near the lows. So if you were in this one, you probably would have got out right here on this candle. Depending on... Yeah, you probably would have got out there. If not, you would have still been able to ride it to the range low. You would have to sit sideways for a second, but both of those work. Then it breaks out, and now you're thinking, all right, we got a bigger range. Comes down. You do get this trade here, and right here you have all these highs. And so then you have a first entry, second entry long failed breakout. It's kind of like a triple test failed breakout. Pretty low risk bar. I mean, I guess it's not that low risk. It's 11 ticks. But this one, if you had your order one tick above that bar, it fills you immediately, and what I would have done here is I would have been hoping to get back to the other side of the range. And so what you do for this one is as you get into it, so you have your order basically like right there, one tick above the bar, but you can see that there's like 10 points there. So as you get filled, I mean, you get filled on your scalp pretty quickly, depending on how far you're going, 4 ticks, 6 ticks, even 8 ticks. You get filled on the first bar, and you get a runner there. And so for me, once it got inside the range and closed, I would have been then probably, the way that I played this was, I did draw the trend line. I was getting out at the EMA though. I didn't ride this thing all the way up. Now you can try to get out at the midline or at the high. The midline would have been a good move because it's also matching these highs. So in hindsight, I probably should have played that to the midline, but I just played it to the EMA. And you got to evaluate that when you're going. But this right here is at 651. So if you took these trades from 606, you got into this trade around 607 or so, you got into this trade at 651, less than an hour, you're done for the day at that point. Now, if you stayed a little longer, there's a short that sets up here, a perfect triple test. The only reason, by the way, this one is green is because a higher low is always safer after a move like that to confirm it. But these failed breakouts are important moves. And for me, this downtrend had played out. It wasn't 2 legs, but most breakouts are going to fail, and you're so far from the EMA, you're at least probably going to come back to here on a move like that. So to me, this is I almost marked this blue. The only reason I didn't is because there will be some people who just try to catch these trades every time and they don't read it properly. And so you have to know what you're doing to take that trade. No offense to anybody who tries to, do that. But in trading, if you try to catch bottoms and tops, you'll fail if you don't know the proper context. So the next setup is here. You've got these highs. And again, this is like a triple test, and it's a lower high than those highs. Really bearish bar. Easy trade. You put your stop order 1 tick below this bar. It immediately fills you on my 6 ticks, and you're good to go. And you can get a runner out of this one as well. Pretty easy runner, to be honest with you, because the way that it went, you can see basically this bar never comes back. So your stop loss is all the way up here. after you scalp out your profit. And so you could have rode this one down. Now, you don't get all the way to the bottom of the range, unfortunately. But again, when you see that you're coming towards the open, and last time you went to the open, you bounced there, I would have been exiting at the open, that dotted yellow line. I wouldn't have been trying to get the range low. Um, there's a saying that we always have of, I can't say it because I'll get flagged for saying curse words. But basically, don't be a D for a T. Uh, don't be a D for a tick. Just fill in the blank. And basically, there, you're not like, yeah, you could try. Don't try to get those 2 extra ticks. Just get out at the yellow line. Like, what are you doing? That's what you got to do there, because you saw that over here you bounced there, and so it's starting to get a bullish bias here. We're getting higher highs, higher lows, and you can see that's exactly what happens. It gets 1 tick above this one, and then that gives you the signal that we're getting a bullish imbalance in this range. And so now you're looking bullish. Now, unfortunately, this thing breaks out, and almost every setup that you get is kind of bogus. And this was really unfortunate because I'm going to mark this one as a green, but I wouldn't have taken this. Some people are going to argue for it, though. On some people's charts, this might have been a second entry long. It is a hidden second entry. You got this high. You got kind of a pullback first entry, pullback second entry, but it doesn't really break higher. So on some people's charts, if you were on a lower time frame chart, this would have actually been like a second entry. And it kind of looks like it's confirming that we have a higher low in place and that the bullish bias is there. And, at this point, you would have been thinking, hey, like, we are kind of starting to break higher here. It's not that convincing, but some people might argue for that. I'm going to mark it, but I didn't love that. I just think it's aggressive. It's kind of sideways. It breaks up. You keep on moving. Now, by the way, I was basically done for the day at this point, but I just stuck around just to watch the price action, see if anything else formed. And there is a trade up here that's decent, because now you have this uptrend. You get a close outside. You do make a new high, but at this point, you kind of have this bullish channel formed that you're thinking, hey, this is probably in play. And what you get here is a really nice little trap setup. So what this one is basically you've got these highs here. And the way I looked at this one was like this. From this low, you're expecting new highs, and you've got them, right? Whoops, I didn't mean to move that. I accidentally put that back. Something like that. You got the new highs. So you do have new highs on this channel, but because you have this bias channel, the whole time we're looking at this dotted brown line. This is yesterday's close, and we're thinking, hey, we're going to fill that gap. I was pretty convinced. I was saying it all day in Discord. I was telling everybody in advance, we're going to fill that gap. So when you saw this form, which is a first entry, second entry short, then goes sideways, it then breaks lower and fails and immediately reverses. So if you had your stop loss, your stop long order 1 tick above this bar right here, then basically this bar fills you as it forms. It goes up and then closes right here. It stops you into the trade. You put your stop loss below this bar, and then boom, it runs you right up, and you get a nice scalp out of that one. That's a really advanced trade. You are going into the highs, but you're expecting this up here. Now, you don't get it right away. It still goes sideways. And they were trying to fight, man. They were trying to push this thing down. But as you can see, eventually we tapped it here. And there's just not really any other setups. Now, the trend line definitely gets confirmed over here. So this bias is up. And at this point, it looks like we're going up towards the highs of yesterday and the overnight, which is right there. By the way, I didn't talk about this earlier, but I did have this measured leg down earlier, and that was my target for the bottom of this. And that was also what gave me confidence in this higher low, because we achieved the measured move. We had our 2 legs down, so you're expecting a move backwards in the other way, because the market likes to move in twos. And knowing all that context gets you those trades. And again, an hour today, less than an hour today, and you could have been done for the day. Super good profit, easy, low stress trades, no losses. The most heat you took on any of those trades was like 2 ticks of heat. And it's just a beautiful day when it works out like that. I love it. So anyway, these are the types of strategies that I like to teach and that I am working on. And so anyway, you can join my email list. The link is in the description. It's on my website. You can join the Discord, and there's going to be some really cool announcements coming up in the next few weeks. So definitely get on the email list and stay tuned for those. And until the next time, I will see you tomorrow.